Welcome to my channel, everyone. And I wanted to hop on here and make a video on the most successful day trading strategies. I'm going to go over in detail the strategy that I personally use, which is very simple, yet very effective, and it's very, very powerful if you use it in the right context. And I'm going to go over some of the qualities and similarities that every successful strategy has in common. And this video is going to help you get insight to the strategy that I use, how I use it, and maybe it's going to give you a light bulb moment for a piece that you may feel is missing from your own trading. Now, I posted this on my Instagram story yesterday. There's a lot of strategies that you can learn, a lot of strategies that you can use, but people fail so much because they dislike the idea of losing that they'll choose not to stick to one system that has a positive expectancy over the long run. You'll forever chase strategies that work 100% of the time, that lose less, or don't lose at all. That's what you guys are aiming for, when in reality, that is not the case. Every strategy is going to lose. You have to blame this on your inability of delaying short-term gratification. You have to realize that you might not see success right away, but over the long run, it's going to work out, and you have to accept losers in the short run and not always 100% winners. Doesn't happen overnight. You have to put the work in, and you have to not think that you are smarter than the markets. The markets are always smarter than you. I posted this on my Instagram story yesterday. I will link my Instagram in the description below. I definitely recommend you going to follow it. I post daily trading recaps and very good trading tips and tricks. Link to this will be in the description below. And without further ado, let's get right into the video. So really fast, here are some similarities that every successful day trading strategy has in common. One of them is understanding market context. In my opinion, this is one of the most important things because the market is essentially a storyteller, and us as traders have to comprehend what it's telling you. Not every day is the same, so you have to understand the context today compared to what it was yesterday, a week later, and going ahead in the future. So market context is very, very important, and you have to be very mindful and open-minded of what it's telling us, and we have to comprehend it and then adjust our trading accordingly. Number two is price and volume is all you need. Listen to me. You have to believe that nothing else can move price besides buyers and sellers' interest. So everything else besides price and volume is considered lagging, meaning you're only going to collect data or information after the fact. The only true way price can move is between buyers and sellers. It's organic price movement, which you'll be able to see from volume and the price and levels themselves. And by doing this, you have to focus on the supply and demand equilibrium, easy economics 101. Once price goes up, you have demand exceeding supply, and if price comes down, supply is exceeding demand. This will help you remove the guessing out of your trading. It's a solid strategy where you're just gauging buyers and sellers' interest. And in my opinion, this is the most important strategy. It's the most successful, and this is the strategy that I use. Supply and demand imbalance versus balanced markets. Number four is less complicated and more simplistic, the better off you are. You have to look at yourself as the only obstacle which is going to overcomplicate trading. It's not very difficult. Again, there's a lot of complexity to trading. That's why it's so hard, but you are the only one who makes it hard on yourself. Less complicated, more simple, the better off you are. And this kind of goes hand in hand with stop relying on indicators. Indicators don't move price, and in my opinion, cause too much noise. Make your charts as clean as possible. I've seen charts and traders post levels and charts of lines all over the places, oscillators, moving averages, RSIs, MACDs, which is totally fine. Again, you could come up with a strategy around that, but that is all lagging price. It only comes on after price moves. So you have to find something that's organic and natural to actually moving the market, which is buyers and sellers' interest, which you could see from volume and price imbalances and balances on a chart. So stop relying so much on indicators. Believe me when I tell you that. It's just going to clutter your head. Focus on a clean and simple chart that's less complicated and more simple. Very important step is risk management. You have to have defined risk before the trade is entered. If you do not have risk management, you will blow up accounts. And then leave your emotions out of the picture. Be disciplined enough to trade only when your setups trigger and be patient enough to wait for them. A lot of traders think they have to trade every day, they have to trade every moving market, but you're going to see in a couple seconds when I show you my strategy where I only trade once my criteria basically triggers. I only trade them, and I'm patient enough to sit on my hands and wait for them to actually form. So these are my supply and demand zones. If you could look at my charts, it's very clean. There's no indicators, no crazy lines. The only thing I have is middle VWAP, because VWAP is volume weighted average price. So there you focus on price and volume. These are supply and demand zones. You get the gauge of interest between buyers and sellers. My charts are not complicated, very simple, and there's no millions of indicators. It removes my emotions out of trading, and my entries always have defined risk. So the whole idea with this is you look to long puts or any bearish position inside of supply, and you look to long calls or look for any bullish position once we are in demand. Now I have videos on my YouTube about this because I'm sure I'm going to confuse a lot of you, and my course also goes into extreme detail about this. But essentially, these supply and demand zones are price imbalances on a chart. What I mean by that is there's two different ways the market moves. The market is either balanced, meaning buyers and sellers are agreeing on price. We are in equilibrium and price is trading sideways. And then you have something called an imbalance where demand exceeds supply or supply exceeds demand. So what we look for is imbalances on a chart, or balances on a chart followed by imbalances after a balanced period. What this indicates is that price moved up from the zone. So if we're looking at demand in this case, price moved up, and when the market was balanced here, buyers' unfilled buy orders are still waiting here. Price came up, left some orders here, and we fast forward and we look to trade the market only when the stock or the zone or the market hits our level. So we only look to trade once we are in supply and demand. Anything else, so what I call the white space, everything between a supply and demand zone, is just noise, and I stay away. I stay away because there's a lot of fake outs, a lot of indecisiveness between price. So I'm very comfortable playing the market inside of my zones because they are high probability areas of where the market could possibly turn with very, very low risk. And here's the supply zone, the sell imbalance on Netflix, which formed about 5 trading days ago. And these levels can form, it doesn't matter when they form, it just matters about the first time price actually trades at that imbalance since the origin location of when it was formed. So this is a 45-minute supply zone, and again, you could find them on any time frame. The only importance here is that how long it consolidates. That's where I get the number 45 minutes, because there's about 9 5-minute candles in this consolidation period, and it only is validated supply after we get the imbalance after the balance period. Hence this move down from when the market was balanced. So here's the same example but on a different chart. We have Nvidia, a 4-hour supply zone above. So the concept here is that you look to short the market because we have a sell order imbalance. It's essentially like a wall of sellers where it must have and must be met with new demand and new buying for us to come above supply. Same thing for the downside. You look to long the market, and the only way the market's going to go below demand is if supply exceeds demand inside of a demand zone where there is a buy order imbalance. Now this zone was formed yesterday after a consolidation, a balance period followed by a rally, and then a gap up overnight. So this validated the 45-minute demand zone because we had strong buyers buying the market in this area, and you only wait and trade for price, or wait for price to come into the level for you to trade and take the trade long or buy calls in this area. So this is the strategy that I use. It's very simple. My charts are not cluttered, and I only look to trade once my imbalances trigger. Now, what's important here is what makes it difficult for some people is you have to understand market context. You have to understand what the market's telling you. Not always do we come in demand and the stock bounces. Some instances we come into demand, we bounce a little bit before heading lower and lower. It all depends on the buyers and sellers' interest. Hence, you have to wait for confirmation in your zone. You don't put a limit order. You don't wait for price to exactly hit the zone and then you take it long or short accordingly. You have to understand the context. You have to understand if buyers and sellers are interested at these levels. If they are, there's going to be rejection or a bounce. And then another thing is that you could wait and look for intraday zones that form, wait for pullbacks into the level. I can tell you right off the bat, This is basically a balanced period in this area right here where we sold off confluent with VWAP. And unfortunately, today was a half day, a day after Thanksgiving. And we did get a little bounce meat out of this bone, but nothing crazy. So don't limit yourself. You could find opportunities all day long. But the point here is that stop searching for a holy grail. Every trading strategy is going to have losing trades. What's important is if you manage your risk, you leave your emotions out of it, and you do not overcomplicate trading. It only becomes so difficult and so challenging and so hard because you get in your own head. It's you versus you. You make it complicated. So I hope you all enjoyed this video. If you did, please drop a like if you learned something. Comment any questions. Follow me on Instagram and also subscribe to my channel. It would help me out a lot. Appreciate it, and I'll see you all at the next video.